Welcome everybody to our next panel here at the Planet MicroCap Showcase Virtual. I'm your host, Robert Kraft from SNN Network. And today's panel that I'll be moderating is titled The Current State of the Cryptocurrency and Digital Asset Space. You know, we wanted to put a panel together really covering a sector of the market that I wish I knew better, and I wanted to put together a group of people that know it way better than me. That's putting it very lightly, and I hope that's not insulting to my panelists, but they truly are experts in the field, and I'm so thankful that they're here to share their thoughts and insights with us. So without further ado, let me introduce our panelists. We got Mike McGlone from Bloomberg Intelligence. Mike, do one of these.
Hello, Robert.
Hello, thank you for joining us. We also got Frank Holmes from HIVE Blockchain and US Global Investors. Hey, Frank, how you doing?
Outstanding.
Very good, very good. All right, and then Fred Pye from 3IQ. Fred, great to have you on.
Greetings from Montreal.
Greetings from Montreal, that's right. So to kick everything off, you know, let's do kind of a state of the union. Everybody's couple minutes state of the union on what's going on in cryptocurrency and digital assets. So since Frank was very instrumental in helping me put this all together, let's start with Frank and then we'll go from there.
What's happening in the crypto space, it's going at a very rapid pace. And when we take a look at the competition with PayPal, then Visa, and what that's really doing is creating more trust. And money is all about trust. And if people do not trust the government and what they're spending money on, then that currency usually loses its value. And we can see intangibles all of a sudden become tangible. And for a lot of people my age, that's very difficult. And now the NFTs you talked about, this is another intangible becoming tangible. But we could take a look at the diamond industry. 120 years ago, it had no value to it. And De Beers tightened up supply and then hired ad people from Madison and said that it represents love. There's intangible of love, and and then you get enough people believing it and buying it, all of a sudden diamonds go up in value. In the 60s, in Japan, diamonds were not part of the engagement process of a wedding. Today it is. And so you can all of a sudden get a group. Well, this is what's happening with Bitcoin. And this is happening with Ethereum, is that you get enough people believing and trusting it, it does become tangible. And that's a real hard part for a lot of baby boomers of grasping that. So we're in a big tear. And if you go back to 1995, when the internet was released, the two big players were AOL and Netscape. Well, they're gone. And there was Ask Jeeves and gone. Yahoo, it is pretty well diluted out. And then it was Google, whoever thought. I don't know who's going to win this race, but I do know in the digital crypto ecosystem, it's growing rapidly.
That was a great way to start off. And we have 1,000 different rabbit holes we can go down just from that alone, but let's get everybody's take as well. So Mike, next up, your State of the Union on digital assets and crypto.
Well, it's one thing I really appreciate about these kind of conferences I like to in events is learning from each other. So I really appreciate those comments from Frank. The way I like to look at Bitcoin is first and foremost, would start out with the facts. We have some enduring trends and things that are happening in this space. I think the way to look at Bitcoin is why should I expect it to just stop doing what it's been doing for last history? And that's appreciating rapidly in price. It's at that stage right now. It's in a rapid appreciation stage. And what's really happening is it's in price discovery. So nothing really matters anymore. Last year, a lot of other things mattered, like point chain analysis and things I saw on chain. But what matters now is when you see headlines like Goldman Sachs saying things like customer demand in the headline. That's a paradigm shift. JP Morgan, Morgan Stanley, Standing Druckenmiller, the dominoes are falling towards massive adoption on a global scale to this digital reserve asset that's probably very early in its price discovery stage. So where does it go? I don't know exactly. I think the next key threshold is around 80,000. And I think a key support now is around 50,000. Something really goes bad, like that big plush we had last year, maybe gets down to 40, but it's really starting to settle into a higher plateau. So the key thing I want to leave with in this space is Bitcoin started it. It started cryptos and started this digital revolution. But what it's doing is it's enhancing the dominance of the US dollar. Now, I have to point this out because there's been a lot of headlines lately about central bank digital currencies and China yuan and how great that's going to be. They're just trying to catch up to what's happening organically. And this is a key thing to remember about Bitcoin. It's been adopted organically on a global scale. Making that something like that, just expecting something that stop is very unlikely and unusual. It's an open source software and the largest decentralized network ever. So that means something in a world that's going digital. Yet the largest, the most widely traded, highest volume cryptocurrency on the planet is Tether, the digital version of the dollar. So what I see is this organic adoption of the world's dominant currency is happening on a global scale. And what's going to happen, I think, in the future is the US is probably going to regulate it more, don't mess it up. And China, by trying to launch a central bank digital currency, sees what's going on and is just trying to catch up. With that, I pass it back to you, Robert.
Very good. Thank you for that. Now, Fred, let's hear your State of the Union as well, and then we'll dig into some of these. Like I said, there's so much to dig into here. I hope we can fit it in an hour. I'll try not to talk that much.
Well, you know, I'm such a fan of both Mike and Frank's here, and I want to kind of like parlay off of Mike a little bit and talk about the people that are getting involved in Bitcoin announcing it, and not to lose Morgan Stanley or Goldman Sachs in the list. I mean, for all intents and purposes, their clients haven't even started adopting it. They've been doing it in their discount brokerage accounts at Fidelity or Schwab. So they're clearly, you're going to start to see greater mass adoption. We won it in Canada because we took it to the regulators, which we'll go into a little bit later. And we challenged the regulators on their rejections, which is interesting because we'll see that in the United States. But when we talk about Bitcoin adoption, and again, going off of what Mike was saying, everybody was going, oh, even Elon Musk is buying Bitcoin and he's allowing people to buy Teslas with Bitcoin. And when you talk to external people, they say, "Oh, you can now buy a Tesla with Bitcoin. You know, it's now a currency." I said, "No, you don't buy a Tesla with Bitcoin. Elon Musk is selling Teslas for Bitcoin. He's buying Bitcoin with Teslas. He's using the car to collect it, amass his Bitcoin. His profits on Bitcoin were greater than the entire profits on Tesla and selling cars last quarter." So, when you see people saying that, oh, you can now buy my product with Bitcoin, actually, you're using your product to buy Bitcoin is really what they're doing, because Bitcoin is a store of wealth, is here for good. A lot of people used to say, oh, 5-6 years ago, I was trying to spend as much Bitcoin as I could. I've got more T-shirts and toques that are worth, $30,000 each that I was using, Bitcoin to buy with. And everybody used to always say, oh, I won't buy Bitcoin till you can buy a coffee at Starbucks with Bitcoin. Well, that would have been a really silly event if we were doing that 5 years from now. So to what both Frank and Mike said, I think, we're now starting to see people understand the power of the platform, the currency as a store of wealth, but also it's the US dollar of digital currencies and digital blockchain.
Absolutely. Look, I remember following Bitcoin back in the Mt. Gox days. I was one of those that was kind of seeing what was happening. And, I was always really questioning whether or not that the real bull case on Bitcoin was that this would be used to purchase goods. And now that it's you're starting to see some of these companies out there saying, hey, you can use Bitcoin to purchase goods. At the end of the day, it seems like most people that are Bitcoin believers and holders are like, well, do I really want to? Is there a point to doing that? Because you're seeing the store of value that it's having just in the rapid appreciation that we've seen over the last couple of years. Frank, what do you think about this?
Well, I think that you're in a secular bull market for digital money, and it's first mover advantage. is how fast can you catch that? As Mike says, is price discovery, and there's going to be innovation discovery. One of the biggest things that we've banked on was Ethereum. Last year, Bitcoin was up 300% and Ethereum was up 475. Over 12 months, Ethereum is almost double what Bitcoin is. Bitcoin gets all the publicity, but all the innovation is coming around the backbone of the algorithm for Ethereum. The smart contracts, the stable coins based on the smart contract, the growth in NFTs, the growth in DeFi, the bonus fees that we're earning, these gas fees from sort of we can see every time there's a huge launch of success in the DeFi world, that all of a sudden we get big bonus fees for it. So I never expected a year ago that DeFi would all of a sudden be a significant driver of additional cash flow and revenue for us. So how it evolves, it's just a first mover race.
Absolutely. Well, here, Mike, let's get your thoughts on that. And then I have to get a definition on DeFi for some of our audience that may not even know what that is yet. But Mike, your take.
I think to piggyback on where Frank left off and where Robert touched on ETFs, first mover is a big factor. So that's the key thing about Bitcoin. It's been adopted on a global scale. That's not going to stop. That's a key point that Michael Slayer brings out is once you adopt the technology, it wins. And that's done for Bitcoin. But let's think of what Fred said and mentioned about ETFs. To me, that's a dangling carrot in the US, world's largest economy. Until that ETF is launched, it's much less of an if, it's more of a when now, because it's becoming irresponsible not to do it. SEC gets that. There has to be, it's just a dangling carrot of higher prices. A strategist I just look for, and that's a question I want to ask all of us, is what's going to trip this up? So until we get through that period, we get the widely disseminated launch of ETFs, quote, plural in the US, most probably GBTC converting, that is an underlying bid below the market. Until that's disseminated to all these wealth managers and all this money in the planet, and certainly in the US, 401ks, I think that have access to this, the price is more likely to go higher. So we have to get through that, get past it, get a little saturated, and then we might hit a peak. So let's say if an ETF is rejected again, okay, well, that's an issue in the US, but I don't know what's going to take for that to end. And I just, as a strategist, my question I ask every day is, what's going to mess this up? And I want to piggyback a little bit what Fred said a little bit too. Is I just mentioned a few of the main brokerages, but here's what I want to end and what I see happening is this to me is one of the most classic examples of human nature has ever seen in history. If you've been holding 100 units of gold, 100 units of any asset class, bonds, stocks, everything, that are at the highest prices ever, relatively. And if you don't allocate at least one or two of those units to Bitcoin, you're at greater risk now that if you don't do it, and it just continues doing the same. So for me, that's what's happening. And that's also self-fulfilling. As the price gets higher and market cap gets bigger, it brings more into space, i.e., can Apple's treasury allocate to Bitcoin? Probably not. Bitcoin's still too small. So the key question I ask myself constantly is what's going to trip this up? And I can't figure it out. When people say it might be banned, I'm like, well, it's well past that. And China's tried it and other places have tried it, and they'll just make it more valuable in the big picture. So I'll leave it there and pass it back to you, Robert, and see what Fred has to say.
Yeah, Fred, take it from there.
We've seen people try to ban it, and that's just not going to happen. The only way to stop Bitcoin is turn off all the electricity in the world. But it's kind of dealing with, Mike, which we deal with every day, all of us, is the fallacy, like there's no use case or it's not worth anything. Well, the Bitcoin blockchain, which is powered by over 40 million, Frank, you would know the number better than I do, Bitcoin miners or mining units, around the world, is the most powerful secured computer network in the world. And yes, the miners make newly minted Bitcoin, but people have to realize that there's actually a fee attached to that as well. And the fee is roughly, let's say, 1/10,000th of the value of your transaction to embed a digital currency transaction on the blockchain. Well, let's look at it this way. Let's kind of look at it backwards. If whoever invented email, SMTP in 1982, the simple mail transfer protocol, let's say they put a stamp on emails. It was 1/10,000th of a dollar to send an email. how rich is the guy that invented email 50 years ago? Well, he's worth $1 gazillion today, right? Now, what's worth more, non-secured movement of email or messages, or secure movement of ownership, value, title, or money? So I would argue the Bitcoin blockchain is worth more than every email ever sent in the history of the world sometime in the future. So there is an embedded value. It is a store of wealth with its fixed supply. But that was the first one. As I want to support what Frank is doing, because we know that Hive is also involved in Ethereum mining at this stage, is that somebody once asked me, what's going to be the biggest blockchain that's going to overthrow Bitcoin? And a guy named Francis Pouliot always said, well, it's the next new one, because whoever creates the next blockchain knows the features of all the ones in front of it. So they get to build a blockchain that's cheaper, faster, bigger, and everything else like that. But the reality is, and Frank knows this, and Frank and I, we're gold bugs from the 70s and 80s, and we listed gold.
So is Mike.
Yeah, now Mike's a gold one.
Used to be.
Yeah, my admiration keeps rising, Mike. But when I was 23 years old, we listed at Guardian Trust, we listed gold, silver, and platinum certificates on the Montreal Stock Exchange. So all I'm doing is what I did when I was 23 years old here in Canada again. But somebody, in a newspaper article, I said, platinum's going to overtake gold as the store of wealth because it was more scarce. Yeah. It had greater industrial uses, and it was more geographically diversified in where you could actually mine platinum. Okay. What I didn't know at 23 years old was there was already $6 trillion of gold in central banks around the world. There's no way you could amass $6 trillion of gold. So hence gold has never given up its traditional store of value use case. By the time somebody even comes close to being a store of wealth with a fixed supply curve like Bitcoin has, Bitcoin will already be X trillion dollars, and it'll be too big to be overthrown. So I just kind of throw that out there in terms of that's the case for Bitcoin. Now we can talk about the other blockchains.
Well, I like what those are all great points across the board. But I like where Mike was going with this, because yes, there's going to be people watching this right now. They're like, all right, y'all made the case, Bitcoin, crypto, we get it, right? So, I would love to hear the other side. What is that? And it doesn't have to be a long answer, because if you truly feel that the bear case isn't, you can't think of it, that's fine too. But I'm just curious, like, what, in your opinions, having watching the space as closely as you are, what is the bear case right now? Frank, let's go back to you.
I don't know. I'm trying to think of the bear case as just going to be government regulations and the interpretation. As we saw in the crypto winter, that every time there was an announcement that Congress was going to be meeting on Bitcoin, the Senate, the SEC, they would all sell off, and then they would get their rally, and that was sort of part of that 2018 winter. But I think what really impressed me when I was first exploring trying to do an ETF in this space 4 years ago was the infrastructure. So you have 10,000 nodes around the world. There's now you had conferences on crypto in New Zealand. You don't have small cap conferences in New Zealand. You don't have gold conferences in New Zealand. Anywhere you went in the world, there was these conferences taking place. And when I was in Miami, 3 years ago, they were scalping tickets because it was sold out. And you're spending $2,000 to go to a conference. The same thing when I've never seen that for an investment conference. So I've never seen it for a gold conference. And Ethereum has 30,000 basically nodes around the world of geeks and people following it and nurturing it. I can't think of that number of analysts being in love with small cap stocks. I can't think of it in loving in stocks, period, excluding even the consumers, but just the analysts, that how big it is. So that told me something big is happening. And I remember going in London, England, and hearing about a group meeting in the old city, and it was like an old movie, and it was rainy and it was foggy, and you walk into a building and you go up the stairs and there's 80 people at 8 o'clock at night want to talk about the latest crypto going on, people in suits, etc. I just never found that in all my years of 35 years of in the gold investment business.
Well, that's one thing I want to add to that is let's look at our demographics. We're a bunch of older white guys. That's very rare in this space. Not only that, we have access to the most stable currencies on the planet. And we were born and raised in it. My father's an accountant. He doesn't get Bitcoin because he's used to US dollars. That's just money. And as Wences-Cassera says, for Americans, you know, money is like water is to a fish. But look at the rest of the world. That to me is where we have to bring this. My colleague over here, Cliff, he's from Zimbabwe. He likes Bitcoin. I wonder why. And to me, that's what's happening on a global scale. So I think, to me, as far as the bottom line, I have one thing I really shifted this year. Is last year I watched more generic, more granular things. Is I'm much more just watching the market technically because I just see and smell and hear that bid below creeping higher every day. And the market tries to get below 50, it doesn't work and it creeps higher. And it tries to get below 52, it doesn't work and creeps higher because there's that bid coming in. So I think the key risk we have to worry about is something I can't predict, like something on chain technical, some kind of technical glitch. And to understand that, I have my youngest son who's home with us in the study program. I asked him to start running a node. He's starting to do that. And it was shocking. I mean, I've always heard this, but what you mentioned, the 60, he runs this node now. He's earning minor funds in transactions. He's not a miner, but he's supporting the network of Bitcoin, decentralized globally. Anybody can do that, and you can't mess it up, but you can contribute to it. Now you can and add to its robustness, and that to me is something I've never heard of. It's just so unique, and young people are getting it, but I guess for some old farts are figuring it out. But to me, that's the key risk. If some kind of ETF has failed in the U.S., I think anytime we see kind of decent correction in the market, what I'm expecting is Bitcoin's becoming risk off, i.e., at some point we're going to get some normalization in the stock market. God help me, I said that because yes, the stock markets have corrected in the past and stayed down for 2 years. I know that doesn't happen anymore, but at some point I think that's going to happen and Bitcoin will win. I don't know when it happens, but to me that correction, when it comes, it'll be moving away from gold. And that's one thing I'm find very unique for this year is I can no longer analyze. I can't even look at gold anymore without putting Bitcoin in the same bucket because the flows are clearly going away from gold towards Bitcoin. I don't know what takes that to end. And so I'll leave on that note. So I just got a little bit bullish on gold because 1700 is good resist, good support. And because crude oil's probably peaked, bond yield's probably peaked, but I don't really see it going much above 1900 because I see the VIG and the vigor and the demand really more shifting towards Bitcoin. And hate to say it, but it's just the fact of the market.
Gotcha. And Fred, what's your take on the question?
You know, I think Mike's right in terms of what you've seen in the development and people going through, you know, through the exact same stages. In terms of pricing, you know, I grew up on the floor of the Montreal Stock Exchange in my late teens, and used to say, why is it going up? Well, there's more buyers than sellers. And from the asset management space, all I can suggest is the inbound calls are not going from what the heck is Bitcoin anymore. It's now going to what is the most efficient regulated way can our balance sheet or our corporation or investors or a pension fund get access to this space, because we're taking a risk not being exposed to it. And I think that that's really the key is, people joke about, portfolio manager used to get fired if he discussed Bitcoin. Now they get fired if they're not analyzing it. And the reality is that true, but our phone calls aren't coming from Montreal and Toronto. They're coming from Israel, Dubai, Switzerland, Argentina, Brazil, Hong Kong, Singapore, and it's not a fallacy that people are opening up, but it is so enlightening now. We spent 5 years going cross country teaching everybody about what's a Bitcoin, where you started off with saying, take $100 bill, separate the serial number from the paper. where's the $100? It's in the serial number. Everybody goes, yeah, okay, we get that. And you put that in your phone, and now you move it around the world instantaneously, securely, and for free. And you go, that's Bitcoin. So people get that now. And now it's more about what are the risks? Is it auditable? Is it manipulated? What are really the challenges that we have to, especially if you're sitting on the board of directors of a pension fund, you have serious fiduciary responsibility. Now, it's not your responsibility to remove volatility out of the portfolio. It's to increase your risk-adjusted returns. And as a non-correlated asset, you increase your risk-adjusted returns by adding Bitcoin to a portfolio, period. So to pension funds that are out there, you have to learn about it because it increases your risk-adjusted returns like anything we've never seen.
Very good. All right. So one other, I don't know if this is necessarily part of the bear case or just maybe it's a myth that's been out there. Maybe we can debunk it here. But one other thing that I've seen come up a lot recently when it comes to Bitcoin, Ethereum, just mining of crypto in general is energy consumption and wanting to do it sustainably. You guys are all gold people, so you know about this idea, just that same equation of making sure that you're mining sustainably, and especially with ESG being very important to the new investor out there, or most investors are now really paying attention to not just environmental, social impact, but also governance. So what's your comment then on wanting to make sure that we're mining some of this stuff sustainably, and are we currently, so, let's do reverse. Fred, I'm going to go back to you first, and then we'll go reverse order.
Oh, it's funny you reversed it right now, because now that's when I want to hear what Frank is going to do.
You know what? Like I said, we're going to Frank first. Frank, let's get your thoughts on that.
Okay, yeah.
All right, we'll go to Frank, and then I'll come to you, Fred.
Okay.
Well, we've had at the very beginning, a strategy that had an ESG spin to it, and positioning so that it was green energy only. Our first operation was geothermal in Iceland. It's hydroelectricity in Sweden, and now it's Canada, at first in Quebec, and now we're just closing on buying 50 megawatt facility, so we'll have our own facility in New Brunswick. All these places have inexpensive energy, and I think that there's a lot of misinformation about how much consumption of electricity is out there. I think if you give me $1 trillion market cap company, and I'll lay odds that the amount of all their business that they're related to, their consumption of electricity is greater. But I will say to you that there are, in particular, China, which has been the biggest producer of Bitcoins, uses coal energy, especially in Inner Mongolia, and other groups are in Kazakhstan using coal energy. And that's sort of where you get the real bad rap for the industry. But we've made it very focused, and now you're seeing lots of stranded electricity in Texas, that you have natural gas and you can turn around and put a power facility beside it, and you can get energy for 2 cents a kilowatt that's not on the grid, and it's dormant. So how do you make this all of a sudden natural gas total ecosystem a cycle? You put a data center beside it and you're mining Bitcoin. So I think that a lot of it's just hype that's just negative towards Bitcoin mining.
Yeah, my view is going to echo very much what Frank has to say. First of all, he didn't talk about the cost, but the cost of renewable energy, once your infrastructure is built, is a heck of a lot cheaper than fossil fuel energy development. So obviously, being in Quebec, there's excess hydroelectric power, which is a renewable resource, which we're very proud of, and Quebec is proud to be a good supplier of renewable energy. But as Frank said, geothermal, wind, solar, it's actually going to come down to, because of the way Bitcoin is programmed, it's going to always come down to the cheapest producers are going to be producing, being more profitable in terms of what they're doing. But I think there's another side of this that people have to look at, because obviously, being in Canada, we're all tree huggers anyways. But, I think what's important is, what do you do with the excess energy that's come off as well? If you can use that offtake to power greenhouses that provide food for, for underprivileged communities or Aboriginal communities in Canada or something else, where you can use the offtake from mining to create greenhouses that can solve other problems. I think, but we're still so early, like we're year 10, right? So there are leaders like HIVE.V and a number of other Canadian companies that are certainly leaders in this, and for compliance purposes. I am a shareholder of HIVE and HIVE.V, but I own all of them, but none of any size. But so in reality, there's a lot of development that's going to happen. I can absolutely be convinced that it's going to go to renewable energy. And it is a very important part of what's going to happen in this space.
I just add to it that what we've done is when you think of in Boden, Sweden, we have 10,000 hair dryers consuming 1,400 watts of electricity. That means a lot of heat coming out the back. So we're drafting and drawings for a greenhouse at the back. And therefore, cabbages and carrots and tomatoes don't have to come from Spain and leave a carbon footprint, or Italy. It can be produced in the back. But that's the future. But right now, our software allows us to do something that a big infrastructure can't do. We can tool down in 15 seconds, 20 megawatts to 1 and idle. And so at a peak energy period from 7 o'clock to 8 o'clock in the morning, or from 5 to 6 at night, we can tool down, which we've been doing, and it allows the no spike in the cost of energy for our community. And further to that, it stops a big CapEx spend for the hydro companies to be able to provide for all of that. So we have the capacity with our software, which is great. And I just think that's going to be the cutting edge as we go into what we're doing in New Brunswick is a small community, and we're going to become a major player.
So I think this is one of those things we need to remember in human history is every advancement in human history has used more and more advanced forms of energy, and the use of electricity by Bitcoin in a world that's rapidly electrifying is part of its signs of strength. So I'd like to really piggyback on what Fred and Frank said with gas flaring and renewable sources. It's one of the most unique examples in history of capitalism going to Bitcoin will only mine where it's electricity is cheapest, as Frank mentioned that. So you have a hydroelectric up in Canada, or hydroelectric, any place that's really rural, it can monetize that energy cheaply and then convert it to something that's really benefit for mankind. It's doing that, and it's shifting more. So one of the poo-poo things has been, okay, so a lot of electricity in China is produced by coal. So what do you think runs electric cars? So to me, that's just part of this process. And let's put ourselves 10 years forward. I have electric panels on my solar panels on my house. I installed those 7 years ago. Not me, but I paid. They're now such more efficient. They're almost break even without subsidies, and it's helping power our nodes. Where's that going in 10 years? The whole world, it's becoming cheaper. Natural gas is going to be redundant by simple natural renewable sources of electricity, and it was what Thomas and Edison predicted anyhow. So I look at this as one of its strengths, and you can't knock out electricity on the whole country and the whole world. You can't. So it's that decentralized strength that, well, in case there's some kind of major nuclear attack, what I don't even want to consider, but you can still run the nodes, run the networks. It just won't go down. Like, I'm an exchange trader, and I remember you knocked on when the Board of Trade had a flood, and that was just the 90s. The Board of Trade stopped trading for a week. And when we had 9/11, then and New York Stock Exchange stopped trading for a week. It should have been electronic. That has never happened and never will happen with Bitcoin. Last year was a good test. It's traded 24/7. The world collapsed. We had trading halts everywhere, and because of this network, Bitcoin kept going up. And then this note: the dirtiest commodity on the planet is gold.
Very good. All right. So, anybody want to add something to that before I move on to the next one? Okay.
And I can share with you, like in Sweden, we hedged our electricity out at 1.6 cents. I mean, that's nothing. And in New Brunswick, the electricity bill, I mean, it's just fallen to 2 cents. Right now, Quebec's most expensive, Quebec Hydro.
Yeah. I'm sure Fred could attest to that right now. So my next topic, we only have about like 15 minutes left, and we have probably some major themes that we didn't even touch on yet, from NFTs, DeFi, talk a little bit, chat on ETFs. So I'm going to leave it to you guys. Which topic do you want to tackle first, so that we can that you all think is probably the most important thing for our audience to hear about, learn more about right now? You know, here, I'll do a show of hands. Let's do DeFi, show of hands. Okay, all right, we got one, the two. Okay, we got NFTs, show of hands. All right, we got none. Oh, we got one. All right, and then and then on ETFs front, we got one. Okay, all right. So DeFi had the most votes. We'll go DeFi first. All right, so let's start there. Frank, tell us what should our audience know about DeFi, and why is this such an important theme right now in digital assets and cryptocurrency?
It's basically taking concepts, convertibles, securities lending, and it's just all digital. So it's lending against your Ethereum. People that want to go short, go long, you get paid back in Ethereum, then you convert it back to a fiat. But that whole mechanism is growing rapidly, and it's outside of a dollar. It's outside of the normal currency. It functions all within it. And then you go with dollar in, and then you can come back out and convert back to a dollar. But I think that the creative minds that are here are just remarkable. And when I shared earlier that when you look at the 30,000 scientists around the world and engineers that are working in Ethereum, and you just don't get that for so many other industries. And I think, as Mike said, they're all over the world. They're not just in one little area. Like if you look at America, 50% of software is Seattle and San Francisco. Biotech is Boston and San Diego. You don't get that with the intellectual capital for Ethereum. It's all over the world. So I think that's where we're seeing new applications rapidly growing, and I remain very bullish on it.
Fred, you also raised your hands about DeFi, so your take.
Good. I'm going to try and simplify decentralized finance as well for a lot of people. And we're just going to start off that if we were to take a poll of everybody, all your hundreds of thousands of listeners that we're expecting to come to this cover, that who believes that money is going digital in our lifetime, everybody would put their hand up and say it is. But it's not necessarily going digital, decentralized with Bitcoin, but it's definitely going digital decentralized with fiat currency. So digital Canadian dollars, digital US dollars, digital euros, digital. So the $4 trillion a day of Forex trading, the minute you get Forex traders to have a cell phone and start trading Forex digitally, the jump between that and Bitcoin and Ethereum, it's all on the same platform. They'll be trading digital US dollars versus digital Canadian dollars, euros, and throwing Bitcoin in there. And that's when you're going to see massive, massive uptake on the volumes of what's going on in Bitcoin. I wrote a white paper on that probably about 3 years ago on Medium. But the reality is decentralized finance means taking things out of the current third-party providers. So for full disclosure, again, we own a big chunk of a company called Canada Stable Corp. We own the first digital Canadian dollar called CubeCAD. Well, we sat down with a monster asset manager in Canada and a monster Canadian chartered bank. And we said, this was 2 years ago, we said, let's show you how to do a $4 million bond trade. We said, everybody's looking at the account from the asset manager to the bank. We said, $4 million bond trade. I said, you ready? They go, yeah. They go, boom, there's the trade. It's done on the blockchain. It settled in T+3 seconds. $4 million went from one account to the other account. The 4 million in bonds went from one account to the other account. And the cost on the Ethereum blockchain was 0.2 of a penny to do a $4 million bond trade in 3 seconds. That's decentralized finance. All bond trading, all stock trading, all real estate transactions, all insurance transaction, all financial related transactions are going to be happening on blockchains, whether it's Algorand or Stellar or Ethereum or Tezos or trying to figure out if I have to plug anybody else, but no, it's these are all blockchains that are definitely focusing on decentralized finance, and I think the future is ridiculously exciting. And this, I'll add one thing on to what Frank says about the developers and the people that are working on it. More university students are going into blockchain than going into Wall Street. There you go.
Oh, yay, finally.
I didn't know that. That's a interesting data point.
It's one thing I've encouraged my sons to avoid Wall Street, because don't do what Dad did. It's fun, but I just want to make one little quick comment on that, because I think I'm glad to mention Ethereum, because I'll just point out the way I look at markets is people ask me a lot, why don't you look at the broader market? And I do, but I look at it as there's Bitcoin and there's Tether. Those are two most widely significant, the most significantly traded cryptos on the planet. And then there's everything else. And Ethereum's the number one, representing DeFi platforms and everything. What does Tether trade on? It's an Ethereum coin, ERC token. So, and that's great. I mean, that's how it works. But the way I look at it is technically, I'll bring in a little technicality to you. Is Ethereum was a great indicator for me when it bottomed at 100, and again, it held 100, and once it broke above 1,000, that was an indication Bitcoin's breaking above 30,000. That was right at the beginning of the year, and now we're at 2,000. And every time Ethereum puts a little distance above 2,000, it's more likely Bitcoin's going to break above 60. It's just the way it works. But the key point is, it's still Bitcoin is basically the beta in this space.
Very good. All right. So because we only have limited time left, and I know Mike has a hard stop, I want to go right back to Mike because he raised his hand on ETFs. So let's get a quick take on ETFs in the digital asset space. You know, why is this important, and why do you think that we're going to start finally seeing more of this?
Well, the main reason is because the Yanks have been behind, and the Yanks will catch up. And I think they're good old America is going to be smart enough not to mess this one up. And I think that's the way they look at the whole space. The quote from Kathy Woods was, in terms of regulation, no regulator wants to be known as the person, the entity that messes up the next best thing. So the way I always like to look at markets from the future and try to anticipate what I'm going to look at. And I think I'm going to anticipate this year as obviously very bullish for Bitcoin. And a key thing that's going to happen this year is will be ETFs will launch in the US. GBTC might have already won that race. Fred kind of mentioned first mover already, and they just might convert. And that brings in a massive amount of inflows, and that sets the stage for the higher plateau. Now, I don't know if it plateaus, but higher, it helps the price discovery stage. So that's what I think is the key reason to look at it. It's also a key risk. If it doesn't happen, you'll get a correction. But as far as looking forward, every day that goes by, it's more likely we will see ETFs in the space. It's more likely means prices go up. Bitcoin price goes up, and until we're past that period, I don't know how long it's going to take. It's pretty much I would say one of these most unique bull markets I've ever seen. I don't see what's going to make it go down. It should continue to just go higher. ETFs are a key part of that dangling bullish carrot.
Very good. All right. And so real quick, before I get Fred and Frank's take on ETFs as well, Mike, just in case you got to drop off, where can people go and find more information about you and hear your insights?
The easiest way to find me is on LinkedIn. You always respond. I'm on Twitter too, Mike McGlone 11. I just don't respond. I post stuff there. I just, own so much time. So I'm on LinkedIn. Happy to link in with anybody. Happy to add people to my distribution list. And I put out the monthly crypto outlook, and people can get on that list too.
Very cool.
Mike does a great job. It's very timely. I love his charts and how he narrates a story with comprehensive but concise.
Very cool. Very cool.
So Mike, I appreciate that. I'll try not to mess that one up.
Very cool. Mike, hang out for as long as you can.
I'm good.
You got to drop off. We'll do one of these. Okay. And so, all right. So then real quick, Fred, Frank, love to get your take. Well, let's go to Fred first, because I know you've been working on the ETF up in Canada.
Yeah.
So tell us what's going on there.
Yeah. I mean, we clearly first mover advantage, and I'm not sure people understand the first mover advantage. It took us, everybody says we were an overnight success. No, it took us 5 years and over $5.5 million. And we took a top 10 global regulator to a public hearing to explain why this works. And the judge came down fairly strict and said, it is not the regulator's job to discuss the merits of Bitcoin. It's not up to them to decide whether volatility is good or not, or the asset class is good or not, or whether Bitcoin's going to work. That's not their job. Their job is to make sure that the entire process is completely regulated. There's a lot of differences between a closed-end fund, the way we operate it, and an ETF. Now in Canada, they've approved, because on the back of our approval, they've now approved ETFs, cash settled ETFs. So you can only access the ETF by contributing cash or taking cash out. So you can't contribute Bitcoin. So the problem in the US is the applications have all been saying, we're going to accept Bitcoin. Well, to try and regulate the entire Bitcoin block, Bitcoin supply chain could be almost impossible. So they'll clean that up. They'll get a cash settled approved Bitcoin ETF in the United States. Having said that, our Canadian ETF, for the record, starts next week or this week. And we expect to be the low-cost producer in Canada and clearly the largest in a very, very short period of time. The demand is absolutely significant, substantial, and we're excited to be able to have a retail product for Canadians for their retirement accounts. But the closed-end fund is unique. So our closed-end fund, the difference is we've been approved in Dubai, which will be announced in the next, by the time we do this reporting. And our intention is to launch our closed-end fund so it trades 24 hours a day, but 5 days a week, 24/5 instead of 24/7. But that means that people can now get a retail product that they can trade in all different markets around the world, and including at some point in time, one of our options is to list in the United States. So we're really excited about the ETF space, the retail space. But our point was in Canada, a lot of people don't necessarily know this in your audience. We had two major failures at two exchanges, Einstein and Quadriga, where over 110,000 Canadians lost $250 million in unregulated platforms. And we stood up there, we challenged the regulators. Your job is to stand up and protect the average investor. So it's your turn to stand up and regulate. And we look at it as the OSC did a 4.5 years of due diligence on 3IQ, our processors, our products, and our suppliers, and they accepted it. And we believe we've got the best product in the world. So it's been a wonderful ride.
How big is it now, Fred? How big is it now?
Our Bitcoin fund is over 1.6 billion, and with Ether and our other products, we're over 2.5 billion. I believe.
2.5 billion?
2.5 billion, yeah. And that's in 11 months and 27 days, if anybody's counting.
Wow.
Great.
Yeah.
Wow. Well, congratulations on that, Fred, and thank you for your thoughts there. So, I mean, Frank, not to get your perspective, I mean, you mentioned earlier you tried to launch a Bitcoin ETF. I think you said 3-4 years ago, something like that. So, where's the thought process now? I know obviously you have HIVE as the way in which for investors to get exposure to Ethereum mine, Bitcoin, cryptos for you guys, but is an ETF still on the mind? From what you can tell us, of course.
No, that's not been on mine. It's been just so focused on building HIVE in the crypto space. And I think from a regulatory world, it'd be difficult for me to do both at the same time. So that's why I've stayed focused on HIVE.
Very good. All right, well then let's to our final topic today, and that's probably the one thing that's been talked about. I would argue the most, at least from what I've seen in the FinTwit community, and also as not a former card collector. I just haven't collected cards in a long time. Is NFTs. I mean, look, this is something that's been talked about. You got NBA Top Shot. Full disclosure, I don't own any, but I definitely looked at the website last night. So, give us your perspective on NFTs. I mean, Frank, let's start with you because you had that great metaphor earlier about how diamonds weren't really worth anything until De Beers came in and now started to market it as engagement rings and whatnot, as fine jewelry. So, I mean, is basically that what we're seeing here with NFTs?
I would say so. Another way to look at it is Andy Warhol art, when he came up with the 5 different shades of Mao and had 1,000 prints of each at $1,000, and they went to $250,000. And they went up and down with economic prosperity, and every recession you could buy the art and would have a big volatility to it. As more people loved Andy Warhol, as China grew, all of a sudden it became a big demand. And you can see that. So now you all of a sudden are digitizing art. And I think our cards is another collector's item. which is a form of art. And I think that that's where the big crossover of creativity is taking place.
Very good. Very good. And Mike, that was Mike saying bye. Get your train. Thank you again for
Safe
joining us.
travels,
Really
Mike.
appreciate it.
I didn't mean to interrupt. I apologize, Frank. It's limited train schedule, so I'm head out. Great talking
No,
to you all.
you're good. Appreciate you joining us. Thank you, Mike.
Cheers.
So Frank, just to follow up real quick. I mean, did you have any other thoughts then on NFTs? I mean, is this really where it, we because I bring it up like this because one of the bear cases I think back in the day was like, all right, well, what's the business model that people are going to do around some of these new blockchain and crypto
The business model is
ideas?
decentralized, and that's
Yeah.
what's so hard.
Yeah.
Would you agree, Fred? The concept for a lot of old school is things can actually create wealth of something decentralized. And in the financial world, Fred, one of the biggest things I saw is in one of my funds 8 years ago when Greece imploded and they shut down their economy and all their banks for something like 6 weeks. And we owned in one of our funds the Greek ETF. And so what happens with a $400 million ETF? All they did was stop redemptions, stop new creates, and it traded a derivative on a derivative of underlying basket of securities, and using the trust factor that the market trusted all the correlation analysis tools that allowed it to be priced by the minute. And when it opened up, it was within 2% of when the markets opened up. So now this new element is, we're going to trust for X number of weeks correlation analysis enough that $400 million does not vaporize, that I don't have to take an impairment on my mutual funds I have this investment in them. That's an intangible on an intangible. And we know that things can actually levitate and grow and go. So I think the idea of a card, whoever thought that a baseball card that it could be worth, or Kobe Bryant's card was worth $1.3 million, just the card. So what happens when it becomes digitized? Well, that's actually a bigger audience of people than just baseball or basketball card collectors. It's opened up to the whole digital world, and it's totally global. So I think that that's the big game changer in my view. What do you think, Fred?
Yeah, you know what? I love the concept of NFTs way more than I like the concept of XYZ. Pardon the language, Bitcoin or
I was waiting for
token.
someone. I was waiting for somebody to use that phrase at some point.
At least, well, put it this way. At least your NFT has something behind it. And let me just I'm going to give a shout out to a couple of business partners, Cameron and Tyler Winklevoss of ours. We're obviously very good clients of Gemini. And they got onto the NFT thing quite early. They have a website, niftygateway.com, that puts collectibles up there, mostly artwork and things along those lines. And they were just featured on the cover of Forbes magazine. Okay. So now I would think owning the cover of Playboy with Marilyn Monroe, I'd love to be the owner of that. And can you imagine what I could sell that for today if I was the digital owner of Marilyn Monroe? Sure, the cover, everybody can see it, but one guy owns it. So they put the cover of Forbes magazine with Cameron and Tyler Winklevoss up for auction on their website. It went for $333,000. Well, there's lots of pictures of Cameron and Tyler, but somebody now gets to own that cover. So just imagine how many magazine covers could go up for auction, how many baseball cards, how many paintings, collectibles. It gives artists a way to monetize and sell their paintings that still allow it to be distributed. What I'm still dying to see is an NFT that can be used to own music, where you can own a song, and that song, when it does get played, pays you as the owner, but also pays the artist properly, and the union and everybody that's behind it, and that 92% of whatever live streaming isn't going to the massive corporations. It's going to the people that own the song, own the music, own the intellectual rights of everything that's going on. We are so close to that happening, which is music to the ears of my musicians, my musician friends, my artist friends, and people we care about that are so important in our society. So NFTs, learn about them. They're not simple, but try and look at it as owning the Marilyn Monroe cover of Playboy magazine. Say, I wish I bought that.
Would you say it's like a class of cryptocurrency assets?
Exactly. Yeah.
It's like Bitcoin, Ethereum, and Dash, and you have all these other different coins out there. You have something that's just, it's how it's evolving so rapidly from Netscape and AOL. You know, now we're going to the next level.
Yeah.
Very good. All right, guys. Well, we're there. So, let's close it out with maybe your final take, and then also where people can go and find more information about you and follow you on social media. So, Fred, I'll go to you first, and then Frank will close us out.
Yeah, well, 3IQ, we have a website, 3iq.ca. We list all the wonderful things that we do in terms of asset management. We're just pure digital asset managers. We expect to be a global leader in the next 5 years. We've partnered up with many different companies, such as ARK Invest and Van Eck and CoinShares out of the UK. There are a lot of really smart people that believe that we have to make this regulated, clean, easy to understand. We don't want people to get ripped off or stolen or lose their passwords. There's a proper way to own this. God bless America. The doors will open and the US will embrace this. We're not going the way of seizing gold from people's pockets. We listen to that all the time. But I will say, as Frank and I have been gold bugs for a long time, we do spend a lot of time with gold company executives and saying, how do we hedge our gold companies? And we say, well, maybe Bitcoin mining's the thing for some of these bigger gold companies to look at. So, and on that note, one of my favorite gold mining companies, Frank, and here's mine.
Well, I think investors have to just stay curious and stay positive. And just this change is taking place, and how do you embrace it? And just stay curious. And I think that's a big game changer. And what I did see in this past year, and we talked about this earlier, Robert, is the millennials in price discovery and why that was so important for our JETS ETF. And then with HIVE. And then the price discovery of minnows attracts the dolphins and the tunas and the sailfish and the sharks and the whales. So they all complete ecosystem. And we're in early stages of something new being created. And if you start seeing minnows going in there, well, that's your first mover. And it's to recognize that. And so I think it's just got to run quickly and be in a position to grasp what's going on. And most of these kids learn from cycling on their Peloton to a podcast, or listening to Fred give a presentation, or they're watching YouTube. I just cannot believe how many people are on YouTube. Like when I was doing one with Jets was taking off, someone said, well, it's Sam Chu. And I said, Sam Chu who? And he said, he's got 2.6 million followers. And he's educating all these people about airlines. And you know what? He had more content there than I'm ever going to get from Merrill Lynch about this airplane and that airplane. And that's what millennials and what new investors want. They want that gravity of them. They want that granularity of an analysis, etc. So you see on YouTube so much commentary. It could be DeFi, or you can talk about fungible. Whatever you want to talk about, it's there. And you almost have to take an hour a day of going and looking for someone new, listening. Does that sound good? Yes or no? What are they saying and doing? And do they have a following? So it's a new world of gathering information and sharing information. So I'm very excited about it. Keeps me staying young for my age.
Very good. Well, gentlemen, thank you all so much for joining me today. This was a lot of fun. I learned a lot. I feel significantly less uninformed now. And so I really do appreciate both of you. And of course, Mike, for taking the time to do this today. So I look forward to our next chat. Continue to stay safe. And yeah, thank you.
Thank you, Robert.
Take care, Fred.
Thank you.
Take care,
Bye-bye,
Robert.
Frank.